What is going on, you guys? My name is Mike. This is Wall Street Traders, where we break down hot trending stocks, put you at an advantage on the market. So the next stock that we're breaking down for this morning is Sundial, or ticker symbol SNDL. I have my lines and graphs already set, you guys. We're on the daily time frame or the daily interval. This allows us to find our support and resistance line. This allows us to find our trend. This allows us to find basically everything that we need to further predict our analysis. We never start from a smaller time frame. This will cause us to trade in a vacuum or ultimately trade blind, you guys. So always start from the higher time frame, and I'll say this every video until it's stuck in you guys' head. So this top line up here represents our major resistance line that can be easily tested. You can see that as we were pumping up, we had trouble breaking past this area, ultimately gapped up. We pulled back down onto was once resistance, will work as a floor on the opposite side, so which caused this bounce up here. Ultimately pulled under. We tried to create a breakout to come back above, ultimately got rejected. And then we kind of bounced around and chopped around in this area until we tried to create another breakout over here. Ultimately failed and pushed us back down to our major support line, which can also be tested. If we look, like I said, was once resistance, will work as a floor on the opposite side. So down here, it was working as resistance. You can see that we came up, got rejected, consolidated, failed. And then it tried again over here about 2 times, came up, rejected, until ultimately we broke above that and started this other trend over here. So that leaves us back for over here where we're at on our support side. And pre-market, we're at almost 2% for the morning. We closed at 83.49 on Friday. So the only thing that I don't like, you guys, is that yes, we are oversold, and yes, we are on major support. The only thing is that we are under this trend line, you guys. And it shows that the relative weakness of these candlesticks. I mean, these are all basically bottom hammer candlesticks, you guys, and it's just consolidating at this very bottom. So I don't like to see that. Usually, once you see that, we'll break below this major support line. Ultimately, if we do, you guys should have your stop losses already placed or set if you're in this stock. That being at the $69 or $70 area. Me personally, I told you guys already that for this specific stock, if we do break below this major support line, I'm still going to be holding this for the long term. This is a core trade for me, specifically Sundial, and I usually don't do this for any stocks, but I do believe that even with the fundamentals backing up this company and all the other good news about this company, that either way, that we'll see a huge spike from this company here in the future. Maybe not today or maybe not next week, but if you are day trading or swing trading this specific stock, I would say as of right now, be very careful. We're really treading on light waters right now. Like I said, maybe a few days ago when I was saying when we were bouncing off of this specific level from when we had this candlestick up here, we would like to see that we would continue this upward trend. However, we didn't, and we pulled back down under this trend line and now consolidating a very tight consolidation on this major support line. So it's really showing that buyers are no longer stepping up, you guys. So it's not really a relatively good sign. Getting in right now would be FOMO. It would be aggressive. I'm not saying that you can't get in right now. If you do decide to get into this specific stock, have your stop loss below the 73 or 75 cent area. That allows you to have some room. If we do peekaboo below this support level and it decides to go higher, you ultimately won't get tagged out immediately. So that's why you always give yourself some room underneath the support line or resistance line, depending on where your entry is going to be at. So like I said, the best entry would be the 81 cent area, or right now, like I said, at the 85 cent area, as long as you have your stop loss below the 75 cent area. That giving you some of that wiggle room. So if you do get in right now, your first target can be around in the 99 cent area or the $1 area, and that being our first highest previous point of our minor resistance. And then after that, it would be back here at the $1.71 area, and that'd be for your long-term holders such as myself. So ultimately, like I said, getting in right now would be really aggressive, but like I said, as long as you're covering your assets and you have your stop loss set or your mental stop loss, having an idea of when you would get out if things do go sour. If we do break below this today, you guys, because the market is going to open in about 20 minutes, I will make an updated video on our next area of major support line, and that's going to be around honestly, it's going to be around in the 41 cent area. I know that sounds really scary to me as of right now with specifically Sundial. I see that as another great buying opportunity just to load up on more shares, because I know in the long term that Sundials will be a great company. So other than that, I hope you guys have a beautiful day. If you learned anything, please hit that like and subscribe button. It allows me to make this content every day for you guys. So have a beautiful day and happy trading.